Welcome to Charting the Markets on this midweek trading session, Wednesday, 17th of May. There's lots to consider at the moment in terms of the charts. We'll take a look at some of the technicals in just a minute with our guest. I'll introduce to you in just a moment's time. Just want to quickly run through some of the other facets, if you like, of what's happening in the markets at the moment. If you were listening to the early morning call today, I was talking there about volatility. It remains at recent lows. It's sort of just ticking off in the last couple of days a little bit, giving a little bit of pressure to risk assets. But we've got in the background a couple of really big things going on. First of all, of course, is the really big picture about interest rates and concerns about a potential downturn in the economies into recession. Well, that certainly doesn't seem to have happened in Japan today. Fundamentally, we've seen some really good economic data coming through, steering us away from recession in the Japanese economy. You'll have heard a lot about the US debt ceiling as well. I've just recently done a podcast on this, which you can catch up with later on today on the IG platform. Talking about the debt ceiling, what is it? Why is it important? And what happens if there isn't an agreement? The market's certainly got that in the back of the mind, but there's a lot of other things happening in the markets as well. But as I say, we're talking charts in the next 15 minutes. Let's introduce our guest, Patricia Elbers from Financial Trends. Patricia, welcome. It's good to have you back on.
Good morning,
before
Jeremy.
we get on to the charts, let's talk a bit about the fundamentals and the background and what's going on. And as I was saying, many seem to be talking at the moment about this debt ceiling. From a technical point of view, it's difficult to talk about fundamentals, but how do you approach this part of the market when looking at the charts? What goes through your mind in terms of what the risks are being presented to us with this debt ceiling issue?
Yeah, so I think it's quite significant because, of course, it's going to affect everything. It's going to affect the dollar, and there is a lot of different views on really, how much of an effect is it going to have. There are a couple of things, I think, although we look at just technicals, a couple of things also which we have to bear in mind. Today there was a number like 2.5 million people who are too ill to work, and that will have an effect also on productivity. So all of these also definitely will have an effect on what's going on in the markets.
And of course, tied into all this is whether or not economies are going to recession. I was reading an article from the IMF just a couple of months ago, really quite negative on the UK economy. When you and I last spoke, and in fact you've spoken about this quite a lot, about sterling's strength, which has been relatively resilient, but I think that's come to be borne out to some degree because I think it's obvious that the economy is actually slightly better than the IMF thought it was. And in fact, I think even the Bank of England, I think the other day, was saying how much stronger things are than had otherwise been the case. Let's start off on the charts and take a look at sterling, because you're talking about productivity, you're talking about the fact that so many people are ill, but nonetheless the economy still seems to be performing. And if we look at this chart, this is sterling rising against the US dollar. So it's sort of borne out in what you've been telling us. My question to you is, now with this chart, have we got more upside to come? What are you looking at from a technical point of view?
Right, so we've seen the shift in the range. If we look at the range here, we've seen the shift from 118.50 all the way to 124.50. We broke through that, new highs above 126. Right now, there is a chance for sterling to have a correction. So we've seen a big move, the highest for over a year. So we're looking really for sterling to come back towards 123, 122 being quite a significant support. So very, very into trying to see a correction, but overall the trend for sterling dollar, we still have our target at 130.
Okay, 130 is a long-term chart. Keeping this up here and just looking at this, you've got that line of support at which we just bounced off in the last couple of days or so. Once it disappears below that and you get a candle close and a full candle below that line, how difficult is it going to be for sterling to fight back above that? Because it then becomes resistance, doesn't it?
Totally. So that's a really good point, because this is where we see pivotal level. So the level you mentioned that is currently at 124, and sterling this morning 124.40.
Yeah.
So we're trading exactly at that level. So the longer it's below it, the more chance there is that there will be a stronger correction. So we're looking at that really to guide us. If we do stay and it acts as a resistance, there's a chance that the correction will be even lower, but we're still looking for 122 being significant support.
Okay, so you're happy being shortened this down to 122, but in the longer term up to 130 you think is the preferred trade?
Exactly, plus 130. And interestingly, when you spoke at the beginning, you mentioned how there was so much negative sterling sentiment, and I remember really at the beginning of the year when they were talking even of below 105. So there has been this big rally in sterling, and it's worth noting that 120 was the base for a long time, and at the moment we're well above that.
Yeah, it's interesting actually on the left-hand side of that chart. I've always called that the quasi-quartang low, because that was the budget, wasn't it? Which everybody was talking about. Okay, let's switch charts and take a technical view of this one here, which is the euro dollar. Now, we've spoken there on sterling losing a little bit of ground at the hands of the stronger dollar. To what degree is this a similar sort of story?
So quite similar story. If anything, euro dollar seems to be weaker in terms of correction. We're looking for it to go, at the moment we're trading at around 108.40. There's a chance that it could go towards 107, 106. So more on the downside for the euro against the dollar. And we can see the strong resistance there at the top of the range.
It's quite a wide range, isn't it?
It's a wide range. And the other thing to note is, I always look at psychological level, because I think they're quite significant. And in this case, it would be 110. So we can see that we're still away from the psychological level. In order to regain that, 110 has to be the trigger, and we've got medium-term target as far as 115.
Ah, right, okay, so that's the upside once we get the recovery underway.
Correct,
and again,
yes.
I guess you've got to get above that line of that resistance, which it peaked up at a couple of weeks ago.
Yes, totally. Yeah.
Okay, let's move on. So at the moment we've got a little bit of a correction going on in euro dollar and the sterling dollar trade. Let's turn our attentions to this one. Different dynamics going on, of course, the Japanese yen, because it's a very different sort of currency than sterling or the euro, because of its ability to operate in other markets, a funding currency and so forth. We've got this little bit of a rally going on here at the moment for the dollar against the Japanese yen. Interesting enough, actually, we speak on a day when, as I said, we've got the Japanese economy showing some resilience, and we just come out of recession.
Yes.
And things looking good. We've got a new Bank of Japan governor. There's expectations he could well be a bit more hawkish than previously.
Yes, yes.
But we've got this weaker Japanese yen. How confident are you on this mini rally in the dollar against the yen becoming a little bit more of a major issue?
Yes, so I mean, it's interesting because as we see here, there are three, you can see the trend line touching on 3 points, and we can see one of the candlestick pattern, which is a hammer.
Yeah.
And the hammer shows a reversal. So we've seen the reversal on 2 occasions here, and it looks like testing at the moment, it's sitting on the moving average, the long-term moving average. So the level we've got here is 137.04, and the moving average that it's testing at the moment, 52-week moving average, is also 137. So we are quite significant levels here. More room on the upside towards 140, but in terms of all the way up, we're not looking for that. We are looking for actually eventually the dollar to go back towards the lows. So really dollar up for the time being up to 140, and then assess it from there.
That's an interesting point, isn't it? When looking at these charts, away from them and talking about the dollar, we've not got a dollar basket or anything up to come, but just talking about the dollar, to what degree is this what we've been talking about, a dollar story rather than a yen, sterling and euro story?
Yeah, I think it is very much a dollar story.
So are you persuaded by what the Fed's doing?
Yeah, I think that's quite significant. You know, whether we seeing the end, there's so many different arguments about that. Is it, are we coming to the close of the Fed hikes, or are we going to see something? Is there going to be a pivot eventually? So it is definitely going to be related, but it is. I find that the dollar yen here, the rally really is at critical level, and again psychological level 140 is going to be quite significant.
Yeah. Let's shift away from the foreign exchange markets and take a look at what's happening with some of the equity markets. What you've done is you brought a futures chart for the S&P 500 on this. These are daily candles, aren't they?
Yes.
You've drawn this big blue trend line in the middle of the picture, but we've had an escape of that. What's the significance of what's been happening over the last few months in the S&P 500?
Yes, so the futures, what's interesting here, that's why I want to bring this chart, is that I also like to do trend lines and look at the midpoint, and to see within a channel, are we within the higher part of the channel or the lower part? So in this case, we started and we looked at it, we've got the channel going up quite steadily. We came off the midpoint at the top there, and then right now the channel lows is acting as resistance.
So where do we go? What's the
from
story?
this level at the moment, we've got 4,133 is where we're trading at the moment. We're looking for very little in terms of correction. Although it's not as impulsive, it is still a positive trend. And we're looking for something like to go back towards, as far as medium term, 4,300. So initially we're looking for 4,200. So some correction, definitely. Bear in mind, it's not as impulsive because we've gone through the lower channel here, but it is still a positive picture.
Okay, let's round it all off and take a look at one of my favourite charts. We always talk about gold whenever I talk to technical analysts, and because, to be fair, on behalf of clients outside of euro dollar, I think this is probably the most talked about chart. And people always want to know where gold is going. There always seems to be someone with an attachment to it. And I put myself in that bracket as well. And we've seen this recent record high. There's this inverse correlation, isn't it, between the dollar and gold? And that, I guess, the weakness in the dollar we've seen recently is part of this rise we've seen. How happy do you feel as a technical analyst up here at the moment? And what is the play on gold from where we are?
Yeah, I mean, totally right. Wherever we go, wherever we're at a conference, they always want the gold chart. Doesn't matter which markets we're covering, the gold is always something which is huge interest. So obviously it's been benefiting from the safe haven status, from what we saw, also the regional bank crisis. All of these things would have put some weight on people actually going to safety and saying, okay, gold is there. So what I wanted to show you really is to say there's a lot going on between 2070, 2080. And the way I see it, I don't see that as a triple top or a major resistance. I see that more as gold having a correction from here. So whenever we make historic highs, you do get some kind of pullback correction. So it wouldn't be, it would be quite okay to see it going back towards, we've got levels here that we talked about, something like maybe 1900, the figure. At the moment, we're below the 2000 and 2000 again, psychological level. So it wouldn't be unusual to see it go back and see some kind of correction. And the big level we have is the 52-week moving average, which is there, which we can see, which is just touched on the support there before it took off. And it comes in at 1821. So I don't think we'd see it go as far as the 52-week moving average, but certainly some kind of correction. And then eventually through this level that we've seen, third time lucky, possibly we've got targets there at 2200.
It's interesting, isn't it? These sort of charts, when you get these corrections, and you're talking about a correction which is partial from the lows that we saw there. Fibonacci's are quite a good way of measuring that sort of thing.
Yes, totally.
When you get the support at the 60-70% level.
Yes.
Which works out quite nicely. I think that is just below the 1900 level. Which would be possibly maybe an opportunity then to buy. Is that what you're suggesting?
Yes, I would look for that. And also, again, think about it as a round number. You know, if you do break through it, then there's going to be a lot of incentives to say, oh, this is going to go lower. So we really often have to just check those round numbers. But overall, we're looking for it to be not a triple top and a move higher in the long term.
In the long term, yeah. Okay, look, thanks indeed. It's a pleasure, as I said, to catch up with you again as Patricia Albers from Financial Trends, taking a look at the markets as things stand at the moment. As I said, a lot cooking in the markets in the background, which could give us a steer ultimately. If you are in any doubt as to how to trade these markets, do contact your client manager.